What's up? Good morning. How we doing? Hope you guys are having a good Friday morning here so far. Let's get into it. Markets open, baby. So, of course, we'll be trading the NQ today. Now, daily chart. Let's first get a little bit of context going. What do you say? So, what have we been seeing a lot of lately? Breakout attempts and failed. Breakouts, flat tops still at 21,450. That is still a thing that we're going to be looking at there. Well, I guess it's a range from 450 to 550 is what we've been talking about. So we'll see. We attempted to break out yesterday of that range in the New York session. This is only showing the New York session, and we failed. So we'll see if that comes into play today. If it does or not, I don't care. We're just going to trade what's in front of us here and see what we can do. Chris, Superfly, Ken, Marshall, good morning. What's up, guys? 1J, trading Chris. Welcome back, brother Steven. Gaines, good morning. How we doing? How we doing, guys? All right, so this morning was PCE morning. We also got consumer spending month over month. That came in at expectations. PCE pretty much came in at the forecast across the board. We came in, the only one that differed was the regular, so not the core. The regular PCE year over year came in at 2.1 versus 2.2 forecast. So, I mean, sure, we got that dump off move, and then that was about it. Basically a net neutral there on a PCE. As far as other news, we get the final University of Michigan sentiment read at 9 o'clock. So we get that in 26 minutes. So keep an eye on that. The final read, by the way, is not as crucial as the prelim. They come in, the final comes in usually about 2 weeks after, I think it's 2 weeks, after the preliminary read. And the prelim is more important because the University of Michigan sentiment usually doesn't have to do a ton of revision. They get it pretty close to what they want to put out on the prelim, so the market tends to put a lot more weight on the prelim read. But keep in mind, we're getting that number at 9. It will move things a little bit, usually, honestly, only for like 60 seconds, then we kind of move on. Scooby-Doo, good morning! What's up, guys? How we doing? Nia, Michael, Outlaw, what's up, guys? Taz, how we doing? Happy Friday. All right, so let's see how we get a push here. We're gonna let, again, institutional orders, I'll let them clear for a few minutes, and then I'm gonna start looking maybe a little early today. Because things are reasonably calm here. All right, now as far as speakers today, at 11:20, this is all Central Time. Bostic from the Fed is going to be speaking. At 12:30, Trump and Elon are both speaking. And that's about it as far as while the market's open. We get a few Fed speakers later on tonight. Trump is speaking on U.S. steel at 4. Who cares? But 11:20 and 12:30 are our speakers. But really the big headline here today, after PCE, which was the big headline, is now, again, the Michigan number at 9. But 60 seconds, we'll be through it, and that's it. So I'm not gonna enter a scalp at 8:59, you know, but I'm not afraid if we get a nice little, maybe we can structure something a little bit larger in terms of longer expected trade duration. I'm not afraid to hold through the Michigan number. It's just not that big of a deal, especially the final. Tony, Bruce, what's up, guys? Welcome back. Now, as far as big breakouts, I'd love to see one. We've been trying a lot this week and haven't really been all that successful in doing so, the market that is. So you know what? If we get a sustained breakout, maybe downside here, I'll sell the rollover and hold on, manage as we go. But you're actually looking at a 5-minute right now. So I'm looking at that up top here. Again, 5-minute upper left, 2-minute upper right. I'm looking at both here today, just because volatility's been a little all over the place this week. And those ranges are a little tighter, so it doesn't hurt to have two pulled up. Just, in my opinion, pick two. Look at the daily as a third, to get context, market inertia, pick 2 time frames and go. Everyone's always like, man, what? You're not looking at the 30-minute? You're not looking at the 15? No, it doesn't matter. They're all the same. It doesn't matter. Pick 2 that you like as far as the balance of quality and quantity and go. The 5 minute's very popular, so if you're gonna put up a moving average, it's relevant on the 5. It's not as relevant on the 2 minute. It's a less popular chart. There's less eyeballs on the actual indicator. But around here, we're not really using indicators anyway, so what does it matter? James, good morning. How you doing? Honest Athletes, what charting software is this? This is NinjaTrader. I also use Thinkorswim, but you're currently looking at NinjaTrader between both these. Peter, good morning. RB says, I lowered my risk. Now feeling chill. Don't care about the trade. Thank you. Next step, scale horizontally. If you guys have anxiety, you care too much while you're in the trade about the result, you're trading too big. You could be trading 3 micros. You're like, I'm not trading too big. You're trading too big. You care. You care. Trade 1 micro. And then scale horizontally so the numbers get big without the per account number getting big. It's a lot easier, I think, to scale that way, at least when trade prop. Scaling vertically, listen, it sounds great. If you're like, hey man, if I can just do, let me get 300K accounts with Apex. If I can just do 3,000 per account per day, I'm making 60,000 a day. Okay, but look at the probability of blow up on that equation. It's pretty high. All right, so are you gonna have $3,000 per account days? Yeah, you probably are. But to make that a goal, I think you'd be much better off maybe sizing that down a little bit in the Apex accounts and then having all the other prop firms as well, long term, over time. You can still get the same, if you're like, I need to make 60,000 a day because I live this crazy lifestyle. Good. I want you to live that lifestyle, but just do it horizontally. But the expenses are higher, bro. You want 60,000 a day and you're worried about expenses. Come on now. Trading Chris, 84 points this week with 1 micro. Already imagining myself with 20 accounts. John, do you think prop firms are going to shut down? They've been saying the same thing for a long time. If they get shut down, we'll do something else. But at some point, a lot of people have been hemming and hawing over this for like a year, 2 years. They're like, man, I can't get into the prop space because government's shutting them down. It's like, okay, that's pretty loser mentality, in my opinion. The opportunity's here now. Make the money now. If they get shut down, at least you made the money and then move on to something else. If they don't get shut down and 10 years from now, you're going to look really dumb. Right? So if you're like, man, it's a cool opportunity, but I'm not really sure. There's no risk to you. The only risk is to them getting shut down. Now, if you're the kind of person who's like, well, I'm going to leave, $2 million in my accounts so that I can break the payout record. It's like, okay, fine. If they shut down, you're going to lose that money. Don't leave it in the accounts then. Just take payouts as you go. Chris K, good morning. How we doing, brother? But you know what, John? As far as like, do I actually think that they're going to get shut down? I have no idea. It would surprise me. I want to live in a world where people aren't protecting everybody from themselves. So if they get shut down, I think that'd be kind of silly because it's an opportunity. And the only people, if you get hurt trading prop firms, it's because you spent every last dime on evals and never took it seriously. And that's on you. That's not Apex's problem. That's your problem. So if they got shut down, I would be shocked and kind of disappointed in whatever entity shut them down. Now, are some going to go out of business? The answer is yes, but everyone's freaking out about Apex making these changes. If you guys don't understand, the prop firm world has always been a race to the bottom. Who can have the easiest rules Who can have the quickest path to payouts? Who can have the cheapest tests / evals? Eventually, that becomes unsustainable. You guys notice the rules are pretty similar, at least the drawdown rules across all props. That's because there's an equation that makes sense, and then there's an equation that eventually doesn't. The props that come in and they're like, we're going to compete with Apex and just be more attractive, they often go out of business because it's unsustainable. So Apex making these changes is a sustainability move. This isn't... They're trying to stop the people that are gaming the system and costing them millions a month. Don't you want that to stop? I guess you wouldn't if you're one of those people. But we're not those people. We're just making money the right way. So it's good. It's a good change. Everyone's freaking out. I'm like, this is a good thing. If they don't do this, then you should be worried that they might go under. They are doing this, which means they're in it for the long haul, which is a good thing. All right, we're coming into 8:45 here, getting close. Got 38 seconds left here on this 5-minute bar, top left. I will get a stop limit sell ready in case we see this bar closing near the low on the 5-minute chart I'm looking at right now. Just because that's the better setup right now. All right, I'll place my stop limit sell. No fill yet. And there we are. We're now sitting short. I'm going to adjust my stop to the least skunk stop that I possibly can, which is going to be... Yeah, I'm going to go above the signal bar. 337.50 for the stop. And then I'll move my take profit below low of day. I'm going to rock with that right now. Probability of that trade is not going to be extremely high because I'm looking for a bigger move. That's basically a bet on the breakout not failing, just because we're well within the range still here, as far as pre-market. So we'll see how that works out. If that stops us, it's no big deal, since the reward to risk is big. Now remember, guys, in 14 minutes, we have University of Michigan hitting. Dustin, do you think the stock market will ever go to 24/7 trading like crypto? Yeah, listen, I think it's probably in the cards. They could do it right now. I think Robinhood is actually already doing it right now. The problem is liquidity. Like with futures, everyone's kind of funneled into one region, which is why it works. But with stocks, you know, anything that's not a blue chip is going to have huge spreads. And if people don't understand spreads, they're going to get cut. But yeah, it's probably in the cards eventually. There's going to be more people getting into the space, adding more and more liquidity as time goes on. Liquidity will always go up. It's not going to go down. So yeah, I do think it's in the cards, but do I think it would make sense to be trading stock at 3 a.m.? Probably not, because liquidity is going to be awful. Crypto, the spreads are always awful. So it's more of a worldwide thing. So the spreads aren't too bad in the middle of the night, because it's not just a US thing. At least primarily. So it's, you know, but the spreads are always awful on crypto, so. But yeah, stocks will eventually be, I think, probably at least 24/5. I don't know about 24/7. Probably at least 24/5 someday, but I'm not going to change anything. as far as the way I trade it. Christopher, but weekend futures are something they considered, I've heard. I'm sure the idea has been tossed around. You know, I don't know. At some point, like, I don't really understand why they don't just open it up. I mean, who cares? It's all automated anyway. I think they should open it all up, probably just 24/7, maybe closed for 1 hour a week if they have to do some clearing or something. But I mean, again, like, the only reason that I could possibly see that they wouldn't just open it all up always is they're trying to protect people from spreads, because they're like, people don't understand these spreads, they're going to get hurt. I don't know. The way that I look at it, it's like, okay, well, then they should have studied better. That's not your problem. That's their problem. Just open up the market, man. Well, a few points in the green here on the trade so far. Again, here's the look. Now, that take profit level is kind of arbitrary right now. Sure, I have it below the pre-market wick. I don't care about the pre-market wick because I don't think many people do. But I'm just going to manage this as we go, bar to bar, kind of on the fly. When you're trading prop, you have to make maybe some decisions that are a little bit different. Like, for example, if we made a move downside and then got a big bull bar that closed at its high and I was 2 points in the money, it's like, oh man, you can't break that 5-to-1 risk reward rule, right? So just make the best decisions you can to not break rules, but still stay true to the strategy. It was a push, about 30 points in the money, 25 points in the money. Nice big bear bar. Nice aggressive push here out of the bears. See if they can get a little bit more. 250, tier 4 level. I'm not looking at that on its own. All right, I'll pull that there. All right. Yeah, that open P&L. Hang on, I still got one contract. There we go. That's that ghost order thing that goes on with Ninja Trader. All right, that was, let me think. Yeah, what was that? Maybe 45,000 bucks? Something like that? Across the board. All right, good little start to the day. Now, as far as the bears here are concerned, we are still in a range market. So when you get a big push like that, I think you gotta be careful. Gotta be real careful. Because the bulls might just go and reverse this thing back up. There's the account roster, by the way, if you're curious. You know, it is shocking to me that NinjaTrader still has not figured out this fucking, this ghost position problem. I mean, on every trade that you guys see where I have to flatten, where it leaves like anywhere from 1 to 10 of the existing contracts that you had, but they're not real. But there's no way to clear it. It's ridiculous. So every time I have to flatten, it costs me like basically the spread, which whatever, I don't really care too much, but it's the principle of it. It angers me because it's like, well, NinjaTrader is literally a broker and a charting software provider. And this is a huge issue that everybody has. I mean, you look online, no one can find a solution to this. And the only way, there's two ways to fix it. You can flatten, which will then flip you the opposite direction, and then you lose the spread plus the commission plus whatever. Or you close out NinjaTrader, reopen it, which like, I'm not gonna do that. I'd rather just lose the spread. So it's just like, I don't know, it's just ridiculous. The principle of it is ridiculous. That should not be a thing. But whatever, gotta deal with it. All right, so you guys see how the bulls tried to wick that thing back up? Bill Gunn says, even when I flatten, it doesn't clear. Only ways to restart NinjaTrader. Yeah, for me, when I flatten it, because what's really happening is it says, oh, hey, you still have 11 contracts short. It's like, okay, no, I don't, because when I flatten, it flips me 11 long, which means that NinjaTrader, when I press flatten, it's trying to buy back 11 contracts to flatten me, but I don't actually have any, so it just buys 11, and then I have to flatten that, so you lose the spread, you lose the commission. I don't know, whatever. It's not a lot of money, but it's like, I mean, Jesus. The principle of it, principle's important. Nah, John, it's a glitch in the system. It's not supposed to, is what I'm saying. Dustin says, do you invest in crypto? And do you think Bitcoin is at the top? I'm not big on crypto at all. I don't know where Bitcoin's at. Bitcoin could go to $1 million a coin for all I care. Well, that'd be good for people. So I would like it to do that. But for all I know, it could go to $1 million a coin. And I think it might someday. However, it would mostly be on speculation because everybody is always scrambling to find an excuse for crypto to be a thing. And I just don't see it. It's slow as hell. It takes forever to clear. Transactions using crypto are awful. They're not better at all than just using a card. Not even close. You go through the Starbucks drive-thru, you scan your phone, it's instant. It's done. Crypto, it's like almost very few people actually accept it. It's not adopted at all the way people think, which is why if it did get a little more adoption, it could go to $1 million a coin because people would be like, okay, it's happening. I just don't see it. It's too slow. It's not fast enough. It's not as secure as everyone likes to think. The government knows what's going on, even though people believe they don't. And I do think the government's going to have a problem with it because right now, Bitcoin's best use is illegal transactions. So unpopular opinion, I know, but if Bitcoin, everyone's like Bitcoin's going to zero. No, I think if Bitcoin failed, which I think is a decent probability, maybe someday when the speculation dies, which would take a long time, by the way, it would not happen in 2 months. It might go to a few $1,000s a coin and you'd have a niche crowd still trading it back and forth when everyone else is like, this thing isn't practical. That's what I think is probably going to happen long term, but will it go to $1 million a coin before that? Yeah, maybe, it might, if the speculation gets hot enough. But do I think we're all going to be paying for shit in Bitcoin in 40 years? Clip this. In 40 years, if we are, you can tell me I'm wrong and I will happily say, damn, that's crazy. I don't see it. It's too slow. It sucks. It's not a good actual practical currency. All right, TC, you know the drill. Corner, 15 minutes. Michael, they say they want Bitcoin to become the main currency, but it always wanted to go up in terms of dollars, so it's worth real money. Yeah, man, I mean, I think... Listen, that doesn't mean that crypto, I think, is going... Again, I'm not saying it's going to zero overnight. That would not happen. It would take a very long time for people to lose faith, and it would eventually trade probably at a few thousand a coin. But... Again, I do think it's probable that maybe it goes to $1 million a coin before that ever would happen, and it would take a long time. The cycle is going to be long, man. And hey, let's be honest, as far as trading, crypto is the bottom of the barrel. It's horrible. It's awful. It's horrible. The spread, you lose the spread, man, you cannot make that up with edge. We got digital gold coming out, man. Hell yeah, digital gold. All right, there's the Michigan number hitting. Yeah, Michigan came in at 52.2, forecast was 51.5. So we'll let that volatility get about 60 seconds and it's usually pretty much dead. What's up, Nick? How you doing, brother? Yeah, listen, let's quickly run through a tier list of trading products. Best to worst, in my opinion, for active, like, day trading. Top. Really in no particular order, but kinda. Futures and small cap stocks that are in play. Those two, by far the best. By far. Futures are a beautifully designed trading product with virtually no ceiling because the liquidity is so deep. Throw any size you want at the futures market, it will gobble it up. So long-term scaling plan, futures. Futures. We will all be dead before, even if we try as hard as we can, before we outgrow the futures market, which is a good thing. Small cap stocks that are in play can provide a lot of edge, but they're not very deep. It's like a coral reef. Eventually you bottom out. You can't really size up anymore without losing edge. Okay, so futures and small cap stocks that are in play off each other, I think. They're very good together. They're very synergistic. Now, next, I would say I would put net sell option strategies kind of like tier 1, but overlapping into tier 2 because they're not really active. It takes 10 minutes a day to manage a net sell options portfolio, even with a lot of positions. So I would put that as kind of like 1/2. Now, below that, I would put blue chip stocks slash ETFs just because it's really hard to find edge and there's a lot of like black swan risk specific to the company. The spreads can actually be a little wider in blue chips. Below that, I would put short-term buying options. Actually, you know what? I would put in tier 2 leaps, long-term equity anticipation securities, basically long-dated deep in the money calls, and then blue chips, tier 3. Tier 4, I would put short-dated calls and puts, buying them, which is basically playing the lottery. That's what you're doing. That's the reality, with a little bit of educated intuition. Tier 5, Forex, because it's so heavily manipulated, there's almost no regulation. The broker can just sell it to you, whatever they want to sell it to you. And tier 6, I would put below Forex, crypto. Because the second you get in, you have lost a massive spread. And if you think you're making that up with an edge, you are sadly mistaken. Not to mention the fees, not to mention how slow it is. How ridiculous is it, by the way, that when you buy Bitcoin on Coinbase, at least for the first however many transactions, I don't know if this is if you do like 1,000 transactions, if this is still the case, you can't even send it for like 3 days. I thought this was supposed to be convenient. Convenience is important. Convenience is if it's inconvenient, it will not catch on, at least as a currency. There you go. There's my tier list. We're getting a big kind of surprise bull bar here. Look at that roll over there, man. Ragebreaker says, dude, for Take Profit Trader, if I have a 25K account, let's say I go up 5K, then drop back $1,500 to $3,500 profit, did I blow my account? What's the, is it, for a 25K, is it 3,000 and 2,000 for profit target and drawdown? I don't think I've ever traded a 25K at Take Profit. I think it's 3,000 and 2,000, is that right? And then I'll tell you the answer. Oh, I'm sorry, you're right. That's for the 50K. For the 25K at Take Profit, it's 1,500, I think. No. No, I don't think you did. Because you went up 5K first. But don't take my word for it. I'm just trading the 150s right now. Yeah, everyone agrees. I think, yeah, so range breakers, when you hit 1,500 in the profit for a 25K account at Take Profit Trader, your trailing drawdown hits 25K, so it stops. You went up another 3,500, so your account was at 25K, you dropped down to 23.5. You should, when this refreshes at like midnight tonight, I guess, you should have still $3,500 of drawdown room. So you should be good to go. With room. Alright, so you guys see this? I mean, look at this. Look at this. I took profit on that trade, what, somewhere in this region? You gotta be careful, man. We're in a range market, so if we were in a trend market, I would have let that thing ride. But we're not. We're in a range market, so this was pretty probable. Yeah, high of day currently is right around 391, 390-ish. 390.50. Less than 100 point, 15-minute opening range. All right, we've got 1 minute, 5 seconds left on this 5-minute bar. See if we can get a nice clean close near the high here of this 5-minute bar. Also, of course, keeping an eye on that 2-minute. All right, let's see here. I think I can structure something pretty good here. See what we can do. 5 seconds here till we get the rollover. If we see a pullback, I'm gonna have to bail. Yeah, I still like that structure. I'll see if I can get a fill on that in the first 30 seconds. It'd be less than a 40-point risk. See if we can take out those little highs, get a little stop hunting push up through 21.4, and then I'd take it off. I'll cancel this in the next 5 seconds, 6 seconds if we don't get a fill here. Yeah, I'll pull that back. By the way, that's a stop limit buy. I know some of you guys are thinking that's a limit sell. No, it's a stop limit buy. I do, Ariab. I show the positions constantly. All right, let's check out what's going on as far as, yeah, here we go. So ATR on the 2-minute is currently sitting at about 29. Which is good. Good to see. All right, 2 minutes left on this 5-minute bar now. I'm interested in maybe a stop hunt there. But if this signal bar becomes too outsized, start messing with my reward to risk. If I watch your weekend live like hours a day, it's amazing to watch on the weekends. I'm glad you're enjoying it. Trading Chris. Nico, sorry for asking again. With the new Apex rule, do I have to explain my strategy each payout? Or only once? I would think only once. I would think only once. You know what you guys should think about? Because, like, I've never been asked to explain my strategy. I think they just look at the data and they're like, okay, this is fine. Because, I mean, they're worried about people, like, gambling with 7 minis. But, I mean, luckily, like, if they're like, hey, we want to see some, I'm like, I have 3 hours every single day of me doing the thing, so just go watch it. What you guys should really do to protect yourselves is, even if it's just, like, 1 or 2 days a week, just record your screen while you're trading. You'll forget it's even in the background. Just record it. You'll have it. If they ever ask, not only can you go back and study that, which is good if you're trading, but if they ever ask, you can just, hey, I record it, I have video, I'm here to do it the right way. And they'll be like, okay, this guy knows what he's doing, or this lady really knows what she's doing. Like, let's move on to the next degenerate. But Chris, I would think only once to answer your question. And then if you know, 6 payouts down the line, they're like, hey, can you explain that again? Fine. But you have to think about it from their perspective. Like, once you explain it once, on the second and third payout after that, are they really going to be like, hey, we're going to use customer service resources that they're already low on to ask the same person the same question again? I really don't think that makes sense. Hey, Ryan, good to have you, brother. It's definitely a, I think a worked muscle from trading for almost a decade now, getting close. If you've got a trigger finger in trading, you're gonna get hurt. So you have to learn to be patient. Eventually you come to a crossroads and it's like, okay, do I want to keep getting hacked in half with this dull blade, or would I rather just be a little more patient? See, I think, Chris, I think you have it figured out, man. It's not a bad idea. All right, right now I'm really interested in this. This high of the range after the open so far. If we can stop hunt it, I do think it'll be enough to push us at least a little through 4. However, my signal bar, I would need it to be above this wick and still inside of the stop wick. That's a 6-point range, man, because if we get a big push, all of a sudden the signal bar not only gets bigger, which means I'm really risking more points on the trade for probably less juice because the stops are already gone. But if the breakout succeeds, then we can ride it. But we're in a range market. A lot of moving parts here. Yeah, Liz, I think you guys are onto something. You could sell Apex the strategy. They say, hey, like, what are you doing? Like, you're the best trader we've ever seen. I mean, listen, the reason Apex, by the way, is 90% off right now in single day pass with 80% off the rebills. Oh, by the way, I didn't even mention this yesterday. The 250K accounts, evals, the 250s are $16.70 with code BIG. BIG. That's a crazy deal. It's almost never that cheap for the 250s. But the reason it's 90% off right now, the reason they extended that was because they just hit $500 million in payouts, I think since 2022. So you could probably charge a lot for your trading strategy. Fava, what is the activation fee? It is for the 250K account right now. It is $140, which is less than normal, at least for the 250. Normally, it's I think closer to 160 or 170, and that is good until I think June 11th, and then that activation fee then goes back up after that. But if you use the code and then to buy the eval for $16.70, the 250K. And you pass it before June 11th, then it's 140. Damn straight, Chris. What'd you think? I was lying to your ass? 1670 for the 250. It's crazy. When I saw that, I was like, ooh, might have to grab some and trade some afternoon evals myself. 'Cause that's a crazy deal. Brizone, I flunked 20 accounts at 80%. That's okay. I should cancel them all and grab the 90% off ones in your opinion. I think that's probably the better deal is to just cancel them and then get new ones at 90. Because then you're not waiting for the rebill. It would depend, by the way, what the rebill was on the 80%. It's probably most likely a better deal to just cancel them and get the 90s. Willie, as long as you didn't get the email that says you can't buy more evals, because they're not going to say it, but I think the reason they're not letting people buy evals is because they're concerned that they are one of the infamous gambler system gamers taking payouts out of funded accounts with 10 minis and 2 trades. Well, you still have to trade the 8 days, but you guys know what I mean. You're gaming the system. As long as you didn't get that email, there's no limit on evals. You can get as many as you like. You can only have 20 funded accounts, though. But evals, there's technically no limit. All right, still watching this 5-minute here. We're not really getting my close in that little 6-point range that I'm so interested in. So let's see if we end up getting a curl backside here. It wouldn't surprise me. Again, range market, developing a trading range is pretty probable here. Chris, for the 100K static, am I correct to assume I do not need to build buffer once funded? Just hit their payout rules? Hey, Chris, could you explain a little bit more what you mean? I'm not sure what you mean by needing to build buffer. I mean, yeah, you just have to hit their payout rules with the 100K static like the other accounts. The only difference is the max payout for the first, I believe, 6 payouts is lower on the 100K static. And the drawdown doesn't trail. Chris, for the trailing drawdown accounts, you have to build the buffer equivalent to the drawdown plus $100 before you can take payouts. No, you have to do the same for the static, but it's a different number. I believe it's 2,100 for the static. Before you can, I think that's right. Before you can take payouts. I have such a mix of accounts. I mix up the fucking rules. Faba. Why is the 250K so much cheaper than the lower accounts? I think that they're less popular. Most people look at the 250s and say, yeah, well, let's either just go the 150 because it's easier to pass or the 300 because it's bigger. I think they're trying to increase the popularity of the 250s. My expectation would be to try to spread out their risk, because you never really hear people talking about the 250s, and I think Apex is trying to make those a little more popular. So they're selling them cheap. I'll bite. Yeah, so the 100K static, the minimum balance to hit that payout threshold is 102.6. It's not 102.1 because they do the 102.6 and then you can take the minimum payout. So that makes sense. So you add 500 bucks to the 1021, you get 1026. I think I've actually probably taken most of my payouts from 100K statics. Either that or, I don't know. Remember that max payout on the 100K statics is a little lower, but then once you get through the 6 payouts, it's uncapped, which is obviously very nice. So I think, listen, I think if you're like newer and you're like, I don't know which account to buy, there's like 17, probably just get the 50. It's a little easier to pass, and I think the 50 is easiest to get to a payout. The 100K static is a good long-term play if you want to use it for swing trading, especially because there's no trailing drawdown. If you are a scalper only who's like, all right, let's get as big as possible, 300Ks are great. Leon, what size accounts do you trade? I have 100K statics, I have 50Ks, I have 150Ks, and I have some 300Ks. And I will soon probably have some 250K fundeds. All right, man, this 5 minute here. Pretty wiki, not a lot of good entry bars for me, but that's okay. I mean, you look at the 2 minute as well, pretty wiki, not a lot of good entry bars. We caught that one $5,000 winner off the open. Well, shortly after the open, after we let the institutional orders clear. But now just seeing what else we can get here. Waiting for a good little signal bar, or 2 or 3. Mark, can you use the 100K static overnight? You can use all the accounts. If you want to trade it, if you're like, I can only trade at 2 in the morning, you can use all of them at that time, doesn't matter. Ooh, Michael's asking the important questions, man. Prop or one live account micro? Well, you're asking mini or micro? You said both. Let's assume you said prop or one live account micro for a beginner. Which one? Ooh, I think they're both of those are good choices. If you can stick to one micro in a personal account, I think that's a great way to start. However, if you can stay disciplined in a prop account, it's equally as good at developing your skill with arguably less money on the line. Because, I mean, even if you're trading one micro, if you have to risk 60 points on a trade because Nasdaq is volatile, that's $120 of risk of your money. That's like almost the all-in cost of a 250K account at Apex. $16.70 for the eval if you use code BIG, and then $140 to activate it. All in, you're at $156.70 if you pass on the first try. Okay, You compare that to 1 micro in a personal account. Again, you gotta, sometimes you have to risk. You're like, man, it's volatile, but this is a great trade. But I have to risk 60 points. Okay, well then just trade as small as you possibly can, which is 1 micro. You have to risk 120 bucks of your money on 1 trade. So in a lot of ways, prop is almost the better choice if you're trying to do this on as much of a budget as you can. Now you can mess up trading prop if you blow through 1,000 evals just gambling and you never really get a payout, but I don't imagine too many of you guys are gonna do it that way because you're hanging out around here, which is where we don't do that. Yeah, Michael, it's marketing, man. I'm sure they're pulling the number from somewhere. Maybe they're pulling it from like, okay, well, you know, if you really wanted to buy these with maybe an expensive margin requirement, here's how much money you would need. It probably comes from somewhere. It's probably not just completely random, but it's marketing. All right, come on, market. Give us a big old curl. Give us a big pop. I don't care. Just give us something that we can put another trade on here. Good start to the day, but I'm not even close to finished up here. Leon, it's 140 until June 11th. After that, it'll probably, now don't quote me because I don't have the information, but I would expect it would be like 160 or 170 after June 11th. But I mean, it could go up, but I doubt it. Higher than that, but maybe it would. Yeah, man, those honestly, those little 25Ks, those can be great, man, especially if you're a little bit newer and you're like, you know what, let me just take this easy, trade small, and get some payouts, get some money hitting my account from Apex, and make this real for myself. Those 25Ks, man, those are slept on. The 50Ks are also great. Well, okay, I guess I said the 50Ks are probably the easiest to get to a payout. That's probably not true. The 25Ks are easier, but I think the 50Ks are a great balance, where it's easy enough, I think, to pass if you have a little bit of edge. It's not quite as difficult to get to a payout, I don't think. And hey, the payouts, they're not small. Like the max payout on a 50K is 2,000 bucks. That's not nothing, right? I mean, and if you have multiple of them, like you can get some money in your account and make this real for yourself. So you're like, okay, I just had 6,000 bucks hit my account from Apex with my 350Ks. Let's really dive into this now. I think it's just good for morale to get that going. All right, let's see if we get a bit of a curl here going here on the 5-minute chart. The 2-minute, I gotta tell you, is ugly as all hell here today. So, I'm gonna keep our focus here on the 5-minute for now. Yeah, see, so Aaron says, if your strategy is solid, don't stress about the prop firm rules, guys. Yeah, Aaron, I would tend to agree with you with an asterisk. Like, here, let me walk you guys through something. Like, for example, if okay, let's say on this bar, sold with a stop below the low wick of that bar. I would have gotten a fill. I would have gone pretty deep in the money. Okay, and let's say I had my stop at the high of this bar or whatever. And then we get this big bull bar. My entry price is like here, right? And this bar closes on the high. Technically, if I'm managing on the fly and I didn't take profits down here, which would have sucked, doing the right thing at this point would be, all right, it's probably time to close it. But I can't. Because that would be, what? 1 point winner? 1.5 point winner? With a 65 point stop? An Apex rep who doesn't trade is going to look at that and say, rule break. They broke the 5-to-1 risk reward, denied payout, baby. You did the right thing, but you technically broke that rule. So you have to make slight adjustments if your strategy includes things like that to make sure you're not breaking those rules. But listen, guys, when you do it enough, it's simple. It's not like that big of a deal. Don't freak out about rule breaks. Just trade well. Don't break obvious rules. Remember the 30% rule. Things like that, and you'll be good. Okay. I don't hate this at all. Let's see if we can get a clean close above that previous wick. Oh no. You guys see that? Now I hate it. We got a wick back and closed at the same tick as this wick high. All these little things tell a little story about, you know, bulls' insecurities, bears' hopes and dreams. If we had closed, I know it seems picky, but this is a very real story. If we had closed more like up here, I would have put a stop limit buy right above that bar. Risked the signal bar and see if we can get a nice little push to at least cover the risk and then some. But we did not get that, so I gotta hold off. Because right now we're in a little trading range, so if we can't break the trading range with any ounce of credibility, can't take it. Yeah, Mark, you know, you would think so if you try to explain to a rep. I haven't had this come up, but if you tried to explain to a rep, like, hey, I'm getting out because the signal bar, it was a long signal bar, and I had to get out of my short. It just happened to be like 1 point in the money. It's up in the air. They might say, I get it, I know what you did, we're gonna approve the payout. And then you get away with it. Or they'll say, I'm sorry, you broke the rule by a lot. So what I always say is, you know, do the right thing. Let's say this. Don't do the wrong thing to avoid trying to break a rule. Like, don't do something really wrong. However, do your best not to break rules. Do not give them any reason, if you can help it, to deny your payout. Don't give them any reason to do so. Because if you get a rep who's in a bad mood, who's worried that they're going to get fired, and they're like, it's my job to save Apex money, they're going to look for anything, right? Now, you might get a nice rep who's like, yeah, well, you know, if traders make money, Apex does better, and they have the right mindset about it. But if someone else is like, it's my job to save my company money, and they deny you for doing the right thing, they have something to stand on, because you technically did break a rule. So don't give them any reason to. All right, young man, I'm writing it down, but I'm not paying you any royalties on that. Do you trade Euro USD or Forex in general? No, I'm not big on Forex. Forex is listen, it's fine. Forex would be a fine market to trade if the industry was better. The problem with the Forex industry is Forex is really popular overseas. However, not as much here in the States, and it's not very regulated. So the problem with Forex, really the only problem with Forex, otherwise it would be a pretty decent market to trade, is that the brokers are, it's almost like dealing with offshore brokers in the stock market. They're sketchy. Can you really trust the brokers? By the way, they can sell you at not even the market price. They can basically set the price at whatever they want inside of their brokerage. And in futures, that's not a thing. Futures is heavily regulated, which is a good thing. So when you get a price, you're getting the price. But with Forex, that's not necessarily true. So if you can't even trust the price you're getting or the spread that they're offering you to basically make more money, how much, like, I can't trade that, not even. So I gotta hold off. That's why it's second from the bottom in my tier list of best markets to trade, at least actively. Day trade. So when you compare this to the 5-minute chart, when you compare that to the 2-minute here, you see how aggressive this range is. So let's see if we can get a breakout. If we do get a breakout, I'm very interested in doing something with that. Chris, coming from trading Forex, the spreads of futures feel like magic. LOL. Yeah, listen, I mean, futures were designed in Chicago to be, well, at least Chicago became the hub, to be just the best trading product possible. They were designed to be a beautiful trading product. And yes, you can also use them to hedge. And institutions and people do. But really, these things were built to be good trading products. Good products to speculate on. And they operate very well. They're very simple. They're far more simple than options. You know, you're not dealing with Greeks. It's just, hey, you want to buy or sell. That's what makes the market. You want to buy or sell. And it's a beautiful thing. And the spreads stay tight because everyone's funneled kind of into one security, at least based on what you want to trade. Nasdaq, S&P. But it's great, man. All right, you can see here now up top. This is the 5-minute chart. This is the 5-minute 20 EMA, which is one of the heavier watched EMAs in the market, the 5-minute 20. Okay, so I'm watching that. If we can get a breakout of this channel, that's great. But I would really like, if we can get a breakout with a 5-minute bar closed beneath that 20 EMA, I will put a stop limit sell and short that thing to the ground. With a stop probably above the signal bar, I'd probably place it. You know, if you were like a swing trader, you could put your stop wider, trade smaller, and put it up above here, above this curl. But I would call, you know, that's more of like a purist swing trader, which I wouldn't, I'm not. So I'm a lot closer to, I'd say, a scalper. I mean, that first trade you guys saw took, what did it take? I entered, I believe, yeah, I entered on the rollover of this. It took 2 bars. Less than 2 bars, because I took profit on this bar in the middle of it. So, you know, well under 10 minutes on that trade. Scott, past 9 Apex and 1 take profit this morning. Good work, Scott. Good work. Yeah, so Dominic's asking, do I see the extremes of this trading range being faded? Yeah, of course. The problem is it's a single bar range. It's not really like a wider range. It's back and forth, back and forth, back and forth. And these tend to break with a degree of randomness. The probability of break on each test is relatively low, but the more you test it, the probability starts to slightly increase. You never really know when the break's coming, and usually when it breaks, it's relatively aggressive, and it's 50-50 which direction. So can you trade the extremes of this little range? 100% you can. You can. However, when I'm looking at a range like this, I'm thinking, how sloppy are the tests? Like, this isn't really super clean as far as the test. There's a little bit of wiggle room out here. And then reasonably, I can't really expect to make any more than half of an average at one of these bars, because then you're pulling back to the middle where you're kind of back to 50-50 in terms of direction. And you start pushing the extreme again and it sucks you back this way. It kind of goes like this, right? So can I make sense of a trade that it has sloppy edges where really best case scenario, I'm making half the bar? For me, those numbers in this style of range, they don't add up great. However, if it was a little bit of a wider range, then yeah, 100%. They start to make sense, and if it's cleaner on the outskirts. But that's more like discretionary decision making. I look at that, and I don't really see a tradable range. I see we gotta wait for a breakout. Superfly just picked up 4 250Ks using code BIG. Let's go. Now, right now we're looking at a 5-minute. Up top here at the bottom, of course, is the daily. Top left is another 5-minute, and top right is a 2-minute chart. This again, back to a 5-minute. I go back and forth between the 5 and the 2. Those are my two favorites, at least right now. Anything can change, I suppose, but those are my two favorites on futures in general. All right, back in 2 minutes. I gotta grab some coffee. I'll be back. Damn, I was looking at the chart out there, and I was looking at the 5-minute up top. I was like, okay, are we gonna get it closed? I gotta get back in there. I gotta run back in, and I come in and we pop. So let's see if we can get some kind of breakout here rather than sit in this range all day. So, you know, this is kind of the problem, though, with trading a range like this, because it shifts, it changes. You know, you look at the 2-minute up top, like, if we're going to trade this range, I'd probably do it on the 2. It turned in from an ascending channel to a flat, to a descending channel, and if you're still looking at an ascending channel, like here, then you buy here, but now it shifts to a descending channel. Probability of breakout is still increasing. You're still only making half a bar, probably at best on average. And what are you having to risk? I mean, do the numbers really add up to a trade that you should be putting on in this exact channel? I'd have to argue no, it's just not clean enough. So I'd love to scalp it, but it's not clean enough. I gotta tell you, this Fear and Greed Index hits every day. Again, not that we can really use it for anything, but it's interesting to look at. I'm watching this 5-minute bar, by the way. If we get a nice clean close at the low of the bar below this wick, you better believe it, I'm gonna be using a stop limit sell. It's 61 out of 100 indicating greed. Last week it was like 68. And then I look at the daily chart. Like, where are they getting the number? Like, we're in a flat. We've been flat for a couple of weeks. Come on, Bears, do it to him. Hit that, give him a nice close below that wick. Let me slap on a sell. Oh, that'd be a nice little structured trade. Yeah, nothing. Nah, young man, the problem there was the bear insecurities. They can't do it. They're like, man, I don't know if we're gonna break out of this channel. We can't go much lower. Yeah, I mean, the 2-minute really shows this range. It's tight, and it's gonna break. And when it does, I will be ready with a stop limit, buy or sell, to punish the other side. Hindmost says 21,350 big level all day. Yesterday and support the previous 2 sessions. I mean, we also have that 450 to 550 flat top. This is just a region that everyone's really watching. It's just sucking us in tighter and tighter. Look like bottom of your screen up top here. That's a daily chart just showing New York sessions. I gotta tell you, I'm looking forward to finally making a move here. I don't care if it's down, I don't care if it's up, just get away from honestly, between 21 and 22. Let's just get away from that whole region. Because it is just slowing us down here. All right, I'll tell you what, while we wait for a good setup here, here's what I want you guys to do. You guys know how I run polls in the post section of the channel. It's just things that I'm curious about hearing from you guys. And honestly, the results often surprise me. It's kind of a fun thing. What poll would you want to see ran that you're curious about? A bigger sample size response. And if I like it, I'll use it today. Ooh, Vinny. Ooh, that's a good one. Preferred reward to risk ratio. That's actually interesting. I know what the results are going to be. I'm often surprised though. I think a lot of people are going to say 2-to-1, reward to risk. And that, listen, that's great. It's a great reward to risk. It doesn't work great in range markets though. Yeah, Chris, preferred 100-to-1. Just say it's kind of nice having the 5-minute pulled up front and center here. Just because you can see everything. And that 2 minutes still kind of wicky here. That's the 2-minute chart. Yeah, the 5 minutes a cleaner chart here today. Dominic has dove into the world of probability. I can't seem to escape the fact that the greater the reward to risk, the lesser the win rate. / probability, yeah. And the greater the win rate, the lesser the reward to risk. It is a math decision. It is not better or worse. It just is. If you walk into the room and you're like, I bet no one here trades 10-to-1 reward to risk like I do, that doesn't mean anything because probability is lower. It's about edge. Edge is the real answer. Somebody, you know, the internet's kind of funny because someone can like post a video taking a trade with, let's say somebody posted something and they took a trade with like a 1-to-5 reward to risk, like super low. That doesn't, like, people don't like that because they don't get the probabilities higher. Because if you only show the one trade, you're like, well, you risked, okay, but you risked 10,000 to make 2,000. It's a math question. It doesn't matter because the probability of success on that trade is much higher than if you flip the reward to risk and do 5-to-1 reward to risk. So, you know, I think that's why everyone likes to trade like big reward to risk, but then they run into the problem of probability, which they didn't see coming because whatever video they watched that told them to, you know, risk $100 to make 10,000 didn't mention probability. So what happens is they end up losing 27 in a row and they wonder what happens. And then they quit trading, which is the opposite of what any of us should want. You know, I want you guys to like make this work just because I do care that you make this work because it's hard and it's you want to get to the goal. But also, like, the more traders that exist, the better the market liquidity. So it's better for all of us. And then hopefully someday we'll have less of this. This sideways little wiki action that makes us sit here and wait. We're gonna get a breakout. It'll always be the same. But more volatility is almost never a bad thing. Christopher says, I'm trading with a 3-to-1. Reward to risk successfully over time. Yeah, it's great. That's great. I bet I would guess that your win rate is a little bit, you know, it's not, you're not going to have like a 77% win rate over a long period of time with that reward to risk, but that's fine. That's not a bad thing. What matters is, hey, do you have edge? Meaning, do you make money over a big sample size? If the answer is yes, Even if you're winning a smaller percent of the time, if you're losing more than you win, that doesn't matter because it's 3-to-1 reward to risk. It's just do the numbers work. Again, there's no right or wrong reward to risk. It's just, do you have edge? It's a math question. It's a decision. What fits your personality best? Yes, Dominic, I agree with you. They have to be somewhat dynamic. You can run with something. Like for weeks, I was running 40-40 on basically every trade with the ATR was above when the ATR was above 25, and it was working very well. And then at some point, you get dynamic. Like today, we risked on again. I'm not done at all, but that first trade we took, I risked I think 44 something points. No, actually. Yeah, it was probably about 44, 45 points to make, I think it was about 50. I have to look back at the footage. There we go. All right. So I'm watching the 5-minute. We have 3 minutes out until the 5-minute bar closes. And we are still in a trading range, okay? So it's really important to consider this. If we see a close of this 5-minute bar like here, I would use a stop limit sell to sell the rollover if we get a push downside through. However, it wouldn't surprise me at all to see an upside retest this little descending resistance, and I'd be risking pretty much the size of the signal bar. We're not getting a lot of like traditional continuation this week, but that's fine. However, the descending resistance of this channel would basically be my risk, which is not great. So I'd be having to, I'd be needing to be willing to bet on the breakout succeeding at that time, which I would have a higher degree of confidence in if we saw a little bit of a growing bear bar here and not a close like here. Just thinking out loud. Yes, Josh, there absolutely is. However, saying ideal point value to risk, that doesn't really exist. Because if there were an ideal, then almost nobody would do anything else, and the market would not trade the way that it trades. You'd have certain scenarios where liquidity on the other side completely dries out, and there's like you're like, I want to buy, but there's no one to sell it to because the probability is so high because that ideal scenario is taking place right at this exact moment. So that doesn't really exist. Think of this all as a probability sliding scale that never really goes to, assuming, again, make the numbers simple, assuming 1-to-1 reward to risk just for sake of explanation. The sliding scale is almost always between 40 and 60% probability. In certain scenarios, it might shoot out in like big continuation setups between 30 and 70% probability, right? But you're never gonna get 99% probability on a 1-to-1 reward to risk, or the institutions on the other side would not take the trade and you wouldn't have anyone to buy from. That makes sense. Vinny! Nico, have you considered explaining how expected value is used? I prefer that over most other metrics like accuracy and RR. Well, they all go together. You get EV from win rate and RR. There you go. Obviously, those are needed to determine EV, but EV seems more holistic. Yeah, Vinny, I made a video about this. I've made actually multiple videos about this where I break out the iPad and we go through the math about expected value. I've done this in multiple videos and explained exactly how to calculate it. We went through the equation and I explained exactly how to determine the expected value of every single trade that you take. Obviously, and this is something that's really important, I think, to understand, guys. If you have statistical edge, this is going to sound weird, but I promise you this is true. If you have edge, every single trade that you make is worth a certain amount of money to you. You make money a certain amount on every trade you take, whether it's a winner or a loser. Now, of course, that's theoretical. It's not like you're like, well, wait, no, but the account, the money's missing from my account. Well, yeah, but if you go to a casino, they have, I would bet, math somewhere that tells them the expected value of every single hand based on the size of the player. And they're like, okay, you know, for a whale, every hand that we play is worth, I don't know, $800 to us, whether we win or lose. Because obviously that expected value number is going to be small to represent the percentage edge. Okay, so we might be talking $25,000 hands, but the EV is going to be a smaller number. But that's still a lot for every hand that you're playing if you're dealing many, many hands an hour. All right, we've got 2 minutes and 27 seconds left here on this 5-minute bar. The 2-minute is still kind of ugly here. So I'm keeping an eye on the 5-minute because we're getting things cleaning up a little bit on the 5-minute, still within this channel. I mean, you look at the 2-minute, that channel becomes even more clear. You look at that little descending support level. Eventually, we're going to see this channel break. So I'm very interested if we can get a little bit of a harder downside push out of this 5-minute bar here before the close, which is in 2 minutes. Gotta keep an eye on that 50% retracement level. Yeah, we're kind of coming into that right now. Oh, man. Okay, so listen, when you're structuring a trade, what I'm looking at right now is here. On this push, you have a lot of average in bears who sell, and they're deep in the red. And then when this happens, you're going to get a little bit of buying pressure from them covering at break even around the 50% retracement zone, because we set the low of day here, high of day here. As much as I'd love to do a stop limit sell right at the bottom of this bar, if it gives relatively clean close, it's not bad. I gotta give it one more bar. I have to. You look at the 2-minute up here. there's still a very good bull argument for still being in this channel. And there's still a very good bull argument at the on the 5 minute here of that 50% retracement. Hey, you know, you're going to have some shorts buying back to cover at break even, right? So you're going to get a little bit of a push. How big is it? That remains to be seen. But I would be happy to use a stop limit sell if we got one more bear bar and cleared both of those problems. You get through the 50% retracement zone, let those bulls cover, get out, let the bears cover at break even, be done with their added buying pressure. Look at the 2 minute chart, we'd be out of this little channel, we'd be lower, and then I would hit it. I mean, you see here, this is one of those things that just happens very, very often. This exact scenario, you're in like a descending channel. You get a nice little attempt at a bear breakout as you come into that 50% retracement zone. I mean, it's just, there's too reasonable of an expectation that you're going to have added buying pressure for both of those reasons here. So I need to see that get cleared and make a move lower if I'm going to short. Yeah, see, I mean, exactly, right? We're getting a little bit of a retracement back into that. This channel's weakening. But we'll see if that 50% level is enough to bounce this thing up out of the hole. And if we do see a break higher, I would not be against going long either. But it would need to break out of the channel. A lot of moving parts, man. I mean, this is why, if you're going to be a trader, I think it really helps if you're someone who likes to sit in a room and think. Because that's all you do all day. And I know that it's very attractive to throw up a 15-second chart and be like, I'm going to trade the 15-second. And you can. I'm not going to say you can't. But for me, and probably for a good chunk of you guys, probably most of you, like all this thinking out loud that I'm doing every day, I would miss things on the 15-second. And I think most people would. Even very, very smart people. You're going to miss things on the 15-second. It's just too quick. Now, all these charts, if you took off the price and you took off the time, they would all look pretty similar. Maybe you'd have more wicks on like the shorter time frames, but they'd all look pretty damn similar. So you can trade whatever you want, whatever time frame you like. But it helps to have, for me, for futures, I think the 2 minute, the 1 minute's for sure the minimum, I'd say, at least consistently. The 2 minute is a preferred minimum, and the 5 minute is a really, really nice, calm, but still not slow balance. So I'm a big fan of the 2 and the 5. Some people like the 15 if they like to be even a little more calm. Christian, what's up, buddy? How you doing? Welcome to the party, big dog. All right, we're retesting that 20 EMA on the 5. Again, it's heavily watched. It's the only reason I care at all, because I know people are looking at it. Nico, how long do you trade? I trade pretty much the whole day, including pre-market, with a break midday to where I leave and I eat a meal for anywhere from 30 minutes to 2 hours. And then I come back and I sit down and I trade the afternoon. But pre-market is small cap momentum stocks, not futures typically. All right. You ever stream your afternoon session? I've been thinking about it. So hang on one second. All right, watching this breakout attempt, by the way, we're still within that channel. So as far as the afternoon session, I've been thinking about doing to match the feel of the afternoon. We could slow down. Maybe I'd hit a voiceover stream with some lo-fi music to match the vibe of the afternoon. I've been thinking about doing that, but I like the calm feel of the afternoon. Don't get me wrong, I love the morning, but it's nice to have both. All right, so we're trying to see here. Look at that 2 minute. See, we're kind of testing the top end of that descending resistance. We'll see if that becomes a thing. Or I should say stays a thing. We'll see if we can break out again. I'm happy to get long, but we got to break out first. Knowing the probability of failed breakouts is going to stop you a lot from taking breakout attempts that haven't proved themselves. All right, you can see on the 5 minute upper left, we have 27 seconds left on the well, both these bars, the 2 minute and the 5, they're lining up here on the rollover. We're right at the top of that existing channel. So if you said, hey, you have to take a trade right here, and for whatever reason I was listening to you, I would probably short this. But if we get one more bar on this rollover that pushes out and gets above that channel, then I would happily buy the rollover of that bar. But right now, there's not enough for me to get long. Again, if I would have shorted the top of that bar if you said you got to take something right now. Vaz, what are your preferred trading hours in the afternoon? So Central Time, I really like 1 to like 2:45. Is there anything wrong with like 11:30 to 1? No, but I think right around noon Central is probably like the dip of the day as far as my preferred hours. All right, Bulls, let's make something happen here. Get us up out of this channel. Somebody show us some kind of backbone here. Vinny says, Nico, what's more useful to you in immediate consideration? This is a good question. Trend lines or levels? I guess if you could only pick one. If I could only pick one, trend lines or levels, I would have to pick trend lines. I would have to. They just come up way more often. As far as levels, the only levels I'm really looking at that I care about are, well, hang on now, Vinny, hang on. If we're talking like 20K as a level, 22,000 as a level, I'd have to pick trend lines. But I think I'd still have to pick trend lines. But if you're looking at like, well, no, I'm talking high of day, low of day. Those are levels. Are you removing my ability to hunt stops? Because if you do that, then, oh goodness, I don't know what we're picking. In that, oh man, if you're like, well, yeah, if you pick trend lines, you can't really stop hunt lows and highs, then I'd have to pick levels. Vinny, no removal, think standard support and resistance. In that case, if I can still hunt lows and highs with stop losses, which is a huge part of my strategy, then I'm picking trend lines. That was nice of you to leave that in. All right, here we are getting again, we're covering this channel. Big old bear bar. Big old bear. Again, listen, this is the danger. This is the danger of trying to bet on breakouts when they haven't occurred yet. I mean, you could look at this and say, okay, bear bar closing on its low, I'll sell the low of that. Wait, we're in a trading range. Okay, bull bar closing, well, at least above the midpoint. I'll buy above that. Oh, wait, filled, one tick, dump, trading range. Gotta be careful with that, right? Obviously, we held off on both those for good reason. Gibbs, Nico, been off the streams lately? Well, where the hell you been, brother? Hope you've been crushing it. Yeah, the afternoons have been really, really good lately. The mornings have been okay this week, but nothing extraordinary. Today, though, pretty good day so far. I've only taken one trade, like a $5,000 winner. But I am not done. We've just been in this weird little trading range. Look at the size of that bar on the 2-minute chart. It's a big bar. Japan, we confirmed progress with the US in trade discussions. Headline that just came through. Oh man. Oh man, look at the 2-minute. Big ol' attempt at a push. Yeah, the Bulls are gonna try to step in after that one, but I mean that basically hit the bottom of that channel. This channel's widening out. It's going to break at some point. Which direction? Couldn't tell you. It's 50-50. It's 50-50. That's the probability here. So, yeah, Taz, I'm thinking about it. But the afternoon would probably be, again, more of a calm, like voiceover. Maybe not calm. but more like a voiceover stream, which I still think would be a cool mix to the morning show. Captain Obvious went short, top of that channel. Nice trade, brother. Yeah, Japan keeping it vague. I don't know, Chris. Come on, man, break out of this thing. It's widening up. It's gonna break. And when it does, I'll be there. All right, Japan's government. Headline here. The US and Japan have deepened their understanding of each other's positions and made progress toward a trade deal. So I guess they had a heart-to-heart. And that's moving the market here. All right, Bears, come on now. Break us downside. Break us downside. Break us downside. Do it to him. Yeah, Michael, listen, news. Michael says, and that's sending the market down. I know that this is a sad reality for a lot of people to accept. But as retail traders, news is a 50-50 shot. I don't think it helps you very much other than understanding that it's going to increase volatility and therefore increase risk. Which is why it's like, you know, should you have a Bloomberg terminal if you're a bigger retail trader? You could. Oh, hold up. Are we good? Is the stream still good? I just had an error come through. I think we're all right. All good? Okay. Okay, cool. All right, there we go. There we go. Yeah, so anyway, as far as news is concerned, and I'm watching this 5-minute bar, man, top left. As far as news is concerned, I don't think you should concern yourself too much with it, other than knowing the schedule and knowing when volatility is going to increase. What I think you guys would be not a great use of your mental capital is like, okay, like CPI is coming. Like, if this number happens, should I immediately buy? It gets baked in so fast that I don't think there's any reasonable expectation of finding edge based on trading news as a retail trader. So don't concern yourself too much with it. I think your mental capital is better used elsewhere. Beautiful, beautiful, beautiful. Let's get a push outside here. Now you can see on the 5-minute chart that descending support is getting pretty aggressive. Pretty steep. The steeper those get, probability of break tends to increase. They become what I would call mushier. Quicksilver, you're back. I could have used you the other day. Still got 3 minutes and 43 seconds left here, though, on this 5-minute bar. The 2-minute chart is starting to clean up a little bit. If we get a nice, by the way, if this bear bar stays reasonably sized, we don't get some massive news bar, and this bar closes near the low, which right now it's trying to wick back up, but if we close near the low, I will put out a stop limit sell just below the wick low of the bar. Try to sell a rollover push down through. That's the current plan. Oh man, if we could go down and take out the lows, that would be, if that could work out for us. First of all, if we get an entry, my risk would be relatively tight. So a stop would be like, whatever, didn't work. But if it works, we could get a big old push down through those lows, take out some stops, give us an extra 10, 15, 20 points, and then hit out. But first, the Bears have to do something. Come on, Bears. 2 minutes to give us a nice close down here. All right, well, we've got about 42 seconds. And the Bears aren't really doing much with their lives, huh? There we go. Come on, Bears. Come on, Bears. Nice low close here. Give me 10 more points. 10 more points and I'll hit it. We better get ready, huh? Gotta be careful. Pull that away from the market in case we get a big old dump off. Oh, Bears. Gotta cancel. They're not doing it for us. Nothing to offer us. Same idea really here applies on this 5-minute bar, which is about 3 minutes and 50 seconds out from a nice close. That 2-minute is still kind of wicky here today, but it really helps us get context. All right, back in 2. Look at this, and we're back upside. Come on, Bears. It's just a steepening, descending support. Arguably, I'd still call this a channel. We really haven't had any kind of successful breakout yet. At some point, any argument for a descending support gets so steep that you can really no longer make the argument. And that is what I would consider finally getting a breakout. We haven't been there yet, which is why I waited for that next bar that ended up reversing on us. So still just the one trade today for that about 5K. Still looking. I'm not done at all. Let's see if we start getting some earlier rejections here. Like if the bears started to fade this here, my confidence level of a downside push increases. And I would feel better putting on that risk. At least the size of the signal bar minimum. If the signal bar was really small, but for whatever reason I still decided to put the trade on, I'd probably go back to the nearest curl. Plus a little, because I don't want to get skunked. And when I say a little, I mean like 1 point. All right, coming back in for a test of that 5-minute 20 EMA. Top left of your screen there, getting close. Again, it's psychologically relevant. It hasn't been extraordinarily relevant today. We've kind of been straddling around it, breaking through it. It's never enough for me to just trade off the EMA itself, but sometimes it'll be enough for me to hesitate in entry if we're coming right into it, for example. All right, Bears, let's see if they can get an early curl here. What I mean by that is not fill. If we backfill this entire range, then it's like, okay, I guess we're still in the range. But if we can get an early rejection, it's getting so steep that a nice low close, I would love to short that and try to get a break of these stops down low. Give us an additional 10, 15, 20 points, hit out, cover. The risk on the trade wouldn't even be all that much. Just looking to structure something that makes sense for me. There it is. There's the test of the 5-minute 20 EMA. That was a reasonable close on the 2-minute, but it was the first bull bar, which on the 2-minute I'm even more inclined to look for consecutive, as you guys know. But back here on the 5-minute, things are looking not too bad here. Still got about 3 minutes left until this 5-minute bar closes. Bumble says, is shorting off the descending resistance on the table for you? Yeah, it might be. It depends how we come into that. But first and foremost, I am interested in a more of a little scalp trade if we get a clean close out of this 5-minute bar, and that would be to the long side. Again, if we get a clean close. If we don't, then I wouldn't take it. Yeah, Michael, I think you might be right. Every time I say this, we end up getting a big, ugly wick back. Yeah, the bears are stepping ahead of that 20 EMA on the 5-minute. It's just so commonly watched that you're going to get liquidity around there. But I would need to see this close pretty much at the high of the existing wick on this 5-minute, which is 1 minute and 25 seconds out from closing. But the bears are trying to pull it back here. All right, 45 seconds. Come on, Bulls. Man, these bulls aren't going to get it done for us, huh? Bears wicking this thing back, but that opens up that other idea, right? If we end up getting an early curl here, back downside, with a nice close at the low of a bear bar outside of that existing argument for a descending support here, then all of a sudden we have something else on the table. Again, if we push upside, still trades on the table. Interesting stop opportunity here. If we could stop hunt, maybe get a bull bar closing up in this region. Stop hunt this, look to get a nice quick push for a scalp. Those are really the ideas now. If we do end up pushing upside, hesitating in this region, I would probably look for a confirmation bar, but I would not be against shorting back downside off that descending resistance as well. So 3, 4, maybe 5 different ideas on the table right now. Just have to watch one, see if one can play out here for me. All right, guys, well, hey, listen, again, take profit is always, at least with code BIG for now, it's 30% off, and it waives the activation fee, which is a really big deal. It saves you over $100 once you pass the test, which is like half price of the all. It's actually less than half price with the 30% off of the all-in cost. But Apex right now, 90% off. You can pass in 1 day, though you don't have to. You can pass in 1 day if you use code BIG. That's BIG. And again, like we talked about earlier, the 250K accounts right now are on special pricing. If you use the code, it's $16.70 for a 250K eval, which is a crazy deal. And then until June 11th, again, assuming you use the code, it is $140 activation fee, which is down from what it normally is. So the 250Ks at Apex, if you have a reasonable degree of confidence that you can pass it, is for sure the way to go, at least today. But that'll be ending soon. As far as, hey, I just want whichever one's easiest to get to a payout, you're probably looking at the Apex 25K, or if you want a little bit bigger than that, the 50K is probably a better bet. But listen, guys, hey, hope you have a great midday session here today, and I'll see you soon. All right, hey, subscribe to the channel if you haven't yet. Leave a like on the stream, helps out tremendously. I'll see you soon. Have a good one. Go big.